Welcome to the chat where the deals get done. Real estate tips and a whole lot of fun. Think different, achieve your goals. Real estate simplified, that's how we roll.
Good morning, Mike Cruz, broker owner of Reside the Real Estate Company, here with Brandon Rizik with Allied Mortgage.
Good morning, Mike. Good morning, everyone.
You excited? Rates are down?
Yeah, we're excited, man.
All
Life
right.
is good. Life is very good.
Here we are, middle of September 2025, interest rates falling a little bit. I know on Monday, everybody was excited. The lowest they've been in quite a while, and we're going to talk all about the rates today.
Yes.
Real quick though, just going to talk about our local Las Vegas real estate market. Inventory's holding steady, just over 11,500 when you include high rises. So that's where we're at, holding steady what we've been. Quick little interesting tidbit though I pulled off the MLS this morning. 30% of all the properties on the market have been on the market for over 90 days. So people, if you have your home for sale or you come across a home for sale, chances are if it's been on the market for over 90 days, you need to drop the price.
Drop the price or take a breather. Take it off
that
and
too.
give it a minute.
That too.
Get a new set of blood looking at those houses. So,
But only 15% of all the homes on the market have been on the market from 61 to 90 days. So, yeah, if you're in that category there, chances are you're going to sell soon or you're going to end up on the 90 plus list, one or the other.
90 plus list. Whoa.
Who wants to be there?
That's a new thing. I'm going to say that.
Yeah.
So. No, I expect that number to change. That 11,000 with the high rises included. I do think it'll change. We'll talk about it here in a minute. But mortgage apps are up.
Okay.
So it's going to catch up, and I think in the next 3-4 weeks those stats might start coming down a little bit.
I agree with you. Hearing a lot of good things out there in the market. Definitely more showings on listings. That's a definite given out there. Agents I've talked to around the country are reporting good things as well. So overall, I think we're headed in the right direction.
We are, and the Fed cut rates. Let's just go into it.
Yeah.
Today we're going to talk a lot about interest rates, a lot about what's happened, what's happening, what Mr. Powell said yesterday at his announcement in September 17th, and what the quote unquote projections are, and what to expect as a consumer.
Right.
Nobody has a crystal ball. Let's start that. I don't. I sure as hell don't. I thought I did, but I didn't.
Yeah.
And I thought I did again, and then I broke it.
I don't know. What you've preached the last few weeks seems to come to fruition. So.
Well, and that's just I have a lot of smart people that I read their stuff and things, but it's not me. I'm not as smart as I like to sound. So. But rates are down. Mr. Powell lowered the Fed rate 25 basis points, which I would have told you that was a bad thing. We were all hoping for 50.
A lot of people were hoping and thinking it might be 50,
and it was wishful thinking.
Yeah.
It really was. But I think rates didn't go too crazy afterward though, because as I've been preaching, in a background, we thought that 50 bips was priced into the market, but when he did 25, I was expecting rates to go a lot more worse than they did. They actually did creep up a tiny bit yesterday after the announcement, and even this morning, and I'll get to this morning as well. But the damage was very controlled for the first time in a long time. Okay. Which gives me a very positive outlook. Now, I'm always positive on real estate, but I'm not always positive on economic data or rates. And I'll tell you I have a positive outlook because for the first time, in my opinion, for a long time, Mike, he gave us a projection. For the last 2.5, 3 years, we have heard we're just going to watch and see where the market goes.
Right, and he mentioned 2 other possible cuts for this year.
He mentioned the 2 possible cuts of 25 basis points each. So, from September all the way to mid-December, there's a possibility we'll be down 75 basis points, 0.75%.
Right.
Okay, so the Fed funds rate currently today, mid-September 2025, is between 4 and 4.25. Okay, with the reduction. So he is saying essentially that our median Fed rate by the end of the year could very well be 3.6.
Okay.
You know.
And 3.6 does not mean mortgage rates at 3.6.
Yes, clarify that. Thank you, Mike. Thank you very much. No, it does not. But to give you an idea, we're between 4 and 4.25 now with one cut, but to be at 3.6 with 2 more cuts, so that's from 4.5
Right.
all the way to 3.6 in 4 months. That's a really, really nice thing to hear. And the reason I say I think we're going to be okay in the market is what that's doing is it's installing confidence in the consumer, in the banks, in everybody. I do believe that a lot of people are starting to see the commitment that rates are going to come down, and a lot of people who want to buy are trying to get in now before the rush.
Right.
Because as we've talked, Mike, there's when rates go down in the 5s,
Well,
the rush is coming.
Right. They say rates actually go below 6%. There's going to be 6 million more buyers in the market here in the United States.
6 million buyers.
6
in the United
million
States.
buyers.
Just from 0.25% to pretty much
Yeah.
where we're at now. I mean, it's not far.
Right.
So, where are rates? FHA, VA, you're in the 5s, you're in the high 5s. We're still there, and we're still in the mid 6s on conventional. I think we crept back up to like 6.3 today.
Okay.
From 6.25 on a national average.
Well, with that, where do you see us going over the next few weeks? I know your crystal ball's broken, but
It is, but I'll tell you, I don't know where we're going to be. I'll be honest with you. I'm very skeptical on where we're going to be. I don't think anybody really knows. In fact, some of the smartest people I know when it comes to economic data really have no idea. I really believe that everything's going to be data driven.
okay.
And between now and the next Fed meeting, so the next Fed meeting is, I think, October 28th, if I'm not mistaken. They meet at the end of October, let's just say end of October, and they meet again in mid-December, December 9th, 10th, somewhere around there.
Okay.
So, between now and the end of October, the market is going to be 100% data driven. Now, what does that mean in English?
Jobs report, inflation report.
Jobs reports, inflation, payroll farms, all of that stuff is going to be very, very sensitive. So investors, people buying in and out of the bond market and the treasuries and mortgage-backed securities and all of that, they're going to be very dependent on whether the data is good economic data or bad economic data.
Right.
So unfortunately, as a banker, I'm kind of rooting for bad economic data because it will in turn keep rates lower.
And that's what we're always talking about is a good economy isn't always the best thing for mortgage rates, right?
No, it's actually the worst thing for mortgage rates usually. So.
Okay. We don't want a bad economy, but we don't want a killer economy.
No, and I don't want recession, and honestly, I don't think we're in recession. I don't think we're close to recession, to be quite honest with you. But the labor reports coming out are the driving force on the Fed's decision for the next 2 meetings on the 25 BIP cuts. And today, which brings me to today, and today the labor report came in a little better than expected.
Okay.
So it is in turn contradicting
Right.
what we heard yesterday and
Correct.
what we were hoping for yesterday. So the market is reacting somewhat in a bad way, but I do call it a knee-jerk reaction, and I think it will come back down.
Okay.
But since yesterday, the last 24 hours or so, rates have been up a little bit. Tuesday they were quite low.
Yeah.
But we're overall the damage is very controlled.
Okay.
So I hope
So
that
when you say
answers a
we're
lot of questions.
expecting fluctuation in the market, are we talking like 1/10 of a point, 2/10 of a point over the next few weeks, you think? Because I personally don't think it's going to be a huge difference. Yeah? Maybe?
I'm silent. I
don't?
have no
Okay.
clue. I have no clue. I don't see job reports, labor reports coming in excessively good.
Right.
So if they are good, like today, they were better than expected. I still don't think it was a good report.
Right.
It didn't blow the forecast out of the water. But the
What I'm
reason
trying-
I'm getting, I'm sorry, I have to clarify this because the reason I'm silent is because we don't know what inflation's doing.
Gotcha.
That's a whole nother driving factor
Okay.
on this that we haven't really spoke about.
Okay.
So that's the hesitation from the Fed
Gotcha.
So, you know,
Okay.
inflation
And
being
what
higher, jobs being down, that's why we're only getting
The
minimal
part I'm
cuts.
trying to nail you down on is not that we're going to see fluctuations, but we're not going to see huge fluctuations likely.
I don't see huge fluctuations,
Okay.
no. But, you know, to say a quarter point swing could happen, yeah, it could.
Okay.
Half a point swing, that's pretty unrealistic. I don't
Gotcha.
think that we're
Okay.
there. No.
That's what I wanted to
I
know.
hope that answers your question.
Yes, it does.
But yeah, we will see a little bit up and down. As mentioned the last few episodes, if anybody's been watching, that really was a great time. It still is a good time. But
Right.
that was a very, very good time to lock your rate in and buy a home because, again, sellers are hungry and rates were lowest since
Right.
they've been in a very long time. So,
And
they're
if you
still
are,
low, and sellers
I was
are still
going to say, if
hungry.
you're still out in the market, don't think it's time to wait.
No.
Because now's they bumped up a little bit last day or so, but it doesn't mean they've gone sky high and it's a bad time to buy.
No, like I said, the first time in a long time we got a projection from the Fed, which we haven't got. So that tells me, Mr. Powell, listen, I don't know the man personally, but I feel like I've been watching him enough to say he wouldn't say these things
Right.
if he really wasn't thinking them.
Yeah.
So, you know, consumers out there, people out there, if he's thinking it, it is a good thing. You know what I mean? So it would have, like, the data would have to really blow them away to probably change their mind.
Okay.
9 of the Fed members voted for 2 more cuts this year.
Okay.
9. That's a pretty high number of the Fed members. I mean, that's
Okay.
definitely the majority.
That's 9 out of 10 or
15.
15. Okay.
So that's a pretty big
That's a good
majority.
majority.
So,
Okay. And that brings us to our next thing is refinancing. Mortgage apps are up.
let's throw that stat out there. We looked this up. Mortgage applications in the last week are the highest, second highest since they've been since 2020. That includes 2021.
Right.
2021 rates were still 3%. I mean,
Right.
so mortgage applications hit the second highest rate that they have since 2020 this past week. Huge number. That's awesome, guys. So now a lot of those are refinance applications. Now, a lot of people are considering their refinance right now. And a lot of those people have 7.5%, 8% rates.
When you say a lot, those would mainly be people that have bought it within the last couple years, I assume?
Most of the time.
Okay.
I would imagine so.
Yeah.
Because if you have a 3% and you're
You're not
refinancing right
refinancing.
now, well, you could be because there's a lot of consumer debt out there.
Okay.
A lot of people are consolidating their debt and doing cash out refis. That's a big thing now.
So they're actually doing a full refinance versus taking out a HELOC or a second mortgage?
Some people are.
Interesting.
Interesting, because it depends on what they owe.
Right.
Let's say you only owe $180,000 on your house,
Right.
and you got $50,000 in debt. From going from 3% to a 5.5 or whatever 5.8.
They're still saving money.
They're
over
still
30%
saving,
on
and
credit
they're not
cards.
fluctuating with the second mortgage.
Yeah.
So but if you owed $400,000 or $500,000, no, you're getting a second mortgage
Okay.
because you don't want to increase that kind of rate.
Okay.
On that kind of balance. So, but in essence, mortgage rates, mortgage applications are up. Refinancing. To get back to your question, I just mentioned that the Fed rate is going to most likely come down 2 more times this year.
Yeah.
And on top of that, the projection for 2026 is even lower.
Okay.
If you physically can hold on, guys. I'm sorry. Anybody out there pumping refis, unless you are legitimately wiping out a bunch of debt and really saving a boatload of money, it is not a good time to refinance.
Hold off.
It's not time. And make 6 more payments and rates will be lower.
Right.
Be patient, guys. Don't let I call them vultures.
Yeah.
Because they're sitting there in a cubicle. They work for the servicer of the bank, and they're calling them, hey, you want to refi? Rates are down. Rates are down. Wait if you can. That's just my humble opinion. Any one of my past clients, I am recommending that they wait at this point.
Okay.
So,
Good. That's great. So basically, if you're thinking about remodeling your home, pulling out some money to do that, maybe wait till the end of the year, first quarter of next year.
first quarter next year. So, the person that Trump just appointed to the Fed, Milton.
I don't ask. Don't
Is
even
his
look at me about
name?
it.
I'm sorry. I think Milton's his name. I'm sorry. He was an advocate for a much bigger cut this time and much more down the road. which is more in line with the president's philosophy, not the Fed's philosophy. And we're not going to get into politics. We're not going to get into the independentness of the Fed
Right.
or anything like that. But the reason I bring that up is, Mr. Powell's term comes up in May.
Right.
And Trump just appointed somebody to the Fed, so the thought process is that person will probably be appointed to the next Fed chair.
Right.
And this person was heavy on rate cuts.
Okay.
So
So it's likely we'll see more rate cuts
it's
next year.
likely next year in the summertime we might see another housing boom,
Yeah.
in my opinion. Now, inflation, who knows what's going to happen with inflation, because that could, anytime rates go lower like that and people spend money, inflation is going to go up.
Right.
Which will mean houses will go up. So let's talk about that, Mike. Let's talk about your side of this.
Yes. As we talked about, inventory still out there. Buyers, you have great opportunity right now. Good negotiating power with the seller. Get those seller concessions. Get a rate buy down. Rates are a little bit lower. Get a buy down to where it's even less.
We just, here we go. We were just discussing a rate buy down
Yeah.
on a client that we're actually mutually working together, and they're in the mid fives,
Yeah.
mid to high fives with the rate buy down.
Right.
I'm sorry, that's wonderful.
That's a great rate. So yeah, utilize those seller concessions. With that said, as I mentioned earlier, showings, the amount of showings for every listing is really increasing.
More buyers are coming in the market.
I talked to an agent yesterday, and he had 28 showings on a $950,000 listing over the last 2 weeks.
We had I just got a contract yesterday across my desk. The house was listed on Friday.
Yeah.
They had, the listing agent told the buyer's agent, listen, I'm being real with you if they like it. I've had 7 showings
Really?
the day it was listed,
The day it was listed.
let
yeah.
alone the weekend. And they had to come in strong with their offer.
Oh, yeah.
So here you
So
go.
we're starting to see definitely that the activities there.
But the point being, and going back to what's happening with rates and what the projections are, guys, the projections are rates are coming down. Okay,
Right.
does that mean wait? No, because what's going to happen is the competition's going to come back. The inflation's
Right.
coming back. The housing prices are going to keep going up
Yes.
if this is the case. Take advantage of the median low interest rate that we're getting now compared to the highs and where we'll end, and take advantage of the seller credits. This is a wonderful time.
Absolutely.
So
Yeah. And that brings us into our next thing here.
where do you project, Mike, since we've seen this, okay, so we came out of a bad summer market. Let's just talk about this because
Right.
I'm just curious on the broker side of things, the real estate side. Summer was pretty rough in Vegas. I
It
mean,
was.
overall, I think it was pretty slow. But at the same time, I'm starting to see the activity. So are you.
Right.
Rates have come down a little bit. Now, fall is usually a busy season.
It is. It's shaping up to be.
It is. Okay, so now with the projections of rates coming low, do you see that amount of listings come, or do you see a kind of, I guess, how do I ask this? So it's like, do you see the amount of listings coming down, or do you see them staying status quo because people are going to be more apt to sell to buy?
I definitely see the number of listings coming down. That's physically what I'm seeing. The last week, the number of properties coming into the market is way down from what it has been over the last 3 or 4 months.
Okay, so my question is something we don't always talk about. We always just talk about buyers.
Right.
Well, what we've seen a lack of are people who want to sell to buy
Correct.
because they have 3% interest rates.
Correct.
They don't want to lose that.
Right.
So with this happening, do you see a lot of that happening? Are you starting to get the calls, or
So
is it too soon?
yes and no. So what I'm seeing is people with those amazing rates, they're taking the opportunity to become an investor. If they need to move, they want to move, they're looking at making that move, moving up, especially people that
Buying
are
and
looking
not
at moving
selling.
up. Correct. They're buying, and then they're going to rent out this property because they can make a positive cash flow because they have that amazing interest rate at 2 and 2.75 or
Whatever the number is,
3.0.
right?
Yeah.
So you don't see that happening. You know,
Right.
you're going to see just less listings, period.
Correct. Wow. Yeah, the number of rental listings may increase, but the number of listings for sale, I don't really see going up much at all. No, actually, I see the number of available properties coming down probably over the next 2 months.
You know, because to me, COVID was yesterday.
Yeah.
Okay, COVID in 2021 and 2020. It feels like yesterday to me and a lot of people.
Right.
It does.
It does.
But it really was 5 years ago.
Yeah.
It was 5.5 years ago,
Yeah.
really. And
When it first hit.
yeah, you know, and then in the next year or two, you know, a lot of those people, I mean, dude, the average person stays in their house 7 years.
Yeah.
What about the person that stayed longer? You know
Well,
what I mean? There's going to be a
exactly.
lot of people
Yeah,
wanting to move in the next couple years
No.
because they've held on to that property. Am I making sense with this?
You absolutely are. And I talk to people every week. I get the phone calls. They're like, I want to move. I want to do this. I don't want to give up my rate. I still like my house, but I want this, this, and this. So I think if rates drop, like we're talking about happening early next year, next summer could be a total frenzy. People buying, selling. We could be in a really hot market again.
Well, let's talk about that with rates. What's relevant? So now we know Mr. Powell is most likely going to be replaced in May.
Right.
We were just told that the Fed funds rate should average at 3.6 by New Year's,
Right.
by the holidays, let's say. So they're saying, this was CNBC, guys. This is not my words. This is CNBC. And there were some pretty high executives and one from the Canadian Bank. I mean, these are credible people talking here. And they said that they're expecting the Fed fund rate to level off at 3%.
Wow. So that's
We're
basically
at 4 to 4.25 now.
Right,
We
so
were at
that's
4.5
over a point.
yesterday.
so 1.5 points of where we were a week ago.
A week ago. And they're saying in less than a year that will be the case. So when you say buying frenzy, I agree with you. I'm telling you, it's going to happen.
Bring it on. I'm ready for it.
Bring it. I mean, 100%. 100%. But
It's our business, and
well,
that's what we do.
It needs to happen. I
Yeah.
think the economy needs that shot in
Right.
the arm too, because housing and don't forget, this is car rates, this is automobile rates. There's other things that play a factor into this, and all those people that got home equity lines of credit. You know, I always say the Fed funds rate doesn't match your mortgage
Right.
rate, but it does on a home equity line of credit.
Yeah.
It does coincide, and it coincide with your credit card rates or your car loans that you're going out and getting. So I mean, this is just huge news all around.
Potential buyers on the fence brings up a point that I wanted to make, especially this time of year as we're getting ready to enter fourth quarter, fall, winter, holiday season. There's this stigma in the real estate world that homes don't sell in the fall and winter.
Oh, stop! Not in Vegas.
Well, I was going to say, we here in Vegas do not live by that. I can tell you time and time again, year after year, my busiest month of the year has been in December.
100%. 100%. October,
So-
November, and December, usually I do very well
Yeah.
in those months.
Yeah, so if you're thinking about buying, you're waiting, I'll be the one to buy in December when nobody else is buying. I'm going to tell you, buy now or wait till the first couple weeks of January.
Well, and you know, I'm going to say this. I sold real estate back east in Cleveland, Ohio, the suburbs of Cleveland,
Right,
Ohio.
there it was different.
It was 100% different.
Yeah.
In fact, after Thanksgiving, we went to sleep till mid-February.
Right.
We just did as real estate agents. We just,
Yeah. And-
if you had to buy a house, you were trying to buy it in 2 feet of snow. Like you can't
Right.
do a roof inspection, you can't do any of this. You don't even know what the landscaping looks like half the time. So that is the mentality of people that were moving here, and that is an old school
Right.
mentality. That is not a Las Vegas thing.
No.
In fact, it's actually it's nicer to move during those times of the year because the weather's better.
Yeah.
Kids are off school.
Right.
You know, they have a lot of time off school where you can, you don't have to worry about things. And, so I got to be honest with you, it's not a bad time to buy. Period.
No, it's great time.
Yeah. So do we have a listing today?
No, we don't.
No listing. Okay. Well, that's
I screwed that up, my fault.
Well, no, it's okay. I'm sorry. I should have asked
Yeah.
that before, but Mike, I've said this over and over again. I'm super bullish on Vegas. I'm very, very positive on the market, even though it has been slow.
Right.
I just see it coming, and I've been doing it just under 25 years. I'm not a lifetime, but long enough to sit here and kind of know what's coming. And I'm telling you, I really do believe it's there.
No, absolutely. Seeing the increase in the number of people in the market, showings increasing 3 and 4 times what they were just a couple weeks ago, is indicative of the market and where we're going. Feedback I'm getting on listings that I've had where maybe we're not getting offers yet are people they're getting ready to buy and write an offer, not doing it yet. But I really think that's going to change even over the next few days. I really think that's going to change.
Oh yeah, I mean, again, it's confidence. People heard rates are coming down on the news. So here's another thing. This is always a first signal to me of a good market coming. Investors.
Right.
When you see investors coming into the market, that is when you know that a good market is coming.
Yes.
Because they're trying to catch it before the boom. I have received personally, now I don't know where they get my number, I have received in the last 10 days 5 calls.
Yeah.
I don't answer them because they're junk, but
Right.
5 voicemails of people trying to buy my house for cash.
Right. Well, yeah, I as a real estate agent, I get those all the time. They want to know what I have to offer them. What
Those
off-market
too,
listings
right.
do I have? And I'll tell you, for a couple weeks, I don't know, the first couple weeks of August, I was like, oh my gosh, finally they disappeared. Because I have.
Oh, they're back.
If you're looking to sell, I have a book of investors ready to go.
Right.
But yeah, this week I've been getting 3 or 4 an hour.
Man, exactly, exactly. So that just tells me. And then BlackRock guys just invested $1 trillion in the market. $1 trillion. So for those of you who think the housing market's crashing and the stock market's crashing, the smartest hedge fund, the biggest hedge fund in the world, just put in $1 trillion into the market.
Right.
They are saying it's going up and it's not stopping.
Right. And yeah, no, we could do a whole podcast just on discussing them and the corporate investors that are out there and what they own and all that
Half
good
the
stuff.
mini LLCs you see are just funnels into those big hedge funds.
Exactly.
The Vanguards, the State Streets, the BlackRocks, and all of that. We should do a podcast on
We
that.
should,
I would
yeah.
like that, so 100%. Well, everybody, please remember to share these, like, subscribe.
Comment. Are you getting ready to buy a home? Let us know. Where are you looking? What are you looking for? If you're getting ready to sell, why are you selling? What are you looking for in the market? Let us know.
Even if it's just something you want to talk about. Listen, guys,
Yeah.
we're not here to solicit your business all the time. We'd love to hear from you regardless, but if you have questions, just ask.
And we're here to answer them.
Right.
All right. Thank you for joining us. Have a great day.
Thanks, Mike.
Welcome to